Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update, and then we're going to see, is it really a buyer's market? Even though that real estate is tanking and everything is just going down and down and down, interest rates are increasing, all that other good stuff. Well, we're going to go ahead and see exactly when it would actually be a buyer's market, because it definitely isn't right now. I'm going to go through the numbers on that to go ahead and let you know exactly where we're at. But before we go ahead and get on with the rest of it, let's go ahead and go on with the mortgage rate update. Now, the mortgage rates as of the last 5 to 6 consecutive business days, interest rates have been increasing once again. And the assumption behind this is exactly what happened beforehand when the interest rates already took a big kick up when the Feds announced that they were going to go ahead and hit us with an interest rate hike. They were going to say that they were going to hit us with an interest rate hike. Now in September, we're going to get hit again. So I think what's happening right now is that the market, just like before, interest rates kicked up before the mortgage rate, the Feds increased the Fed fund rate. So now what I think it's doing, and they primed it, it was primed, and then that's why interest rates went back down again. Now I think that the market in itself is pre-priming itself again to go ahead and anticipate for the Fed fund rate to go ahead and come back up, because let's say the Fed fund rate comes back at another 75 basis points, then that interbank transfer, because that's what a Fed fund rate is, how much money that one bank charges another bank in order for them to purchase whatever credit that they are selling. The money that you're trying to buy from one bank to another bank. But let's go ahead with the mortgage rate update. As of 8/22/2022, 30-year fix will be sitting at 4.97%. 15-year fix will be sitting at 3.94%. 30-year high balance will be sitting at 5.42%. DSCR loan, which is a debt service covered ratio loan. This is a loan product that is mainly for people who are just doing, trying to use the income qualified on a rental property, the rental income coming in versus the debt that you're trying to go ahead and assume. So like the principal, interest, tax, insurance, and then all your running costs, everything like that, that's going to be your total debt. That is going to cover the amount of rental income coming in. Now, typically what we like to see on this is going to be no less than 1.15 ratio, which is, in essence is if you have $1,000 coming in and $1,000 going out, that'll be a 1-to-1 ratio. So 1.15, 1.25, anything above that is going to be really, really good. You get a better rate. Your home buying power becomes much, much better. Your cap rate on your property looks much, much better. Everything looks really, really, really good. So you want to go ahead and stick to the 1.15 and or above on that one. But that'll be sitting at 8.88%. Bank statement loan is another one of those non-qualified, non-agency loans. That is going to be sitting at 7.91%. FHA 30-year fix will be sitting at 4.34%. 7/6 adjustable rate mortgage, which is a mortgage product that stays interest only for 7 years. Then it gets adjusted every 6 months after that, according to the rate and the cap on your product. 5.34%. USDA, which is a zero down payment program, will be sitting at 4.37%. VA 30-year fix will be sitting at 4.42%. And then the hard money fix and flip is sitting at 9.75%. Now that's for somebody who needs something, like, for instance, this could be long term, but majority of the time, 95% of the time, these are short term loans that you want to go ahead and buy a distressed property. Like, let's say you were driving down the street, you see this really crappy property, you're like, you know what, that's a really good deal, I'm going to go ahead and buy that. I need some extra capital to go ahead and fix it too, and then you go ahead and flip it for a profit. That'll be sitting at, what is that, 9.75%. It is a little bit expensive, but it is a short-term loan, and then you could always refinance out of it if you end up going a little bit longer. But typically, this is how you go ahead and get that capital to go ahead and do these fix and flips. But in order... Hey guys, Selfless Plug here. If you want up to 50% commission rebate, 0% listing on selling your current home, or any of these mortgaging products that I went ahead and stated, link in the description below. Allow me to beat your big bank, because at the end of the day, it's just your money. And if you don't care about where your money is going and you don't want to save some money, well, that's a personal decision. But let's get on with the video. In order to see if it's a buyer's market, right? The buyer's market, should I buy? That's a big question. Everybody, should I buy? Should I buy? Should I buy? Now, as far as the total numbers go right now, even though we had a negative 31.1% year-to-date change, that's year-to-date. It's a pretty hefty on sales. The amount of money, the depreciated value on homes isn't that much. But as far as single family homes, we lost a year-to-year change as far as decrease in sales. And that's because you guys aren't stupid. People aren't dumb. My channel is not based off of me saying, you know what, I am a real estate broker, I have the best service, I want to go ahead and make I want to make a bunch of money off of you. No, that's not what the point of this channel is. The point of this channel and the point of me doing all of this is to go ahead and give you a very unbiased point of view, because my main job, I have a fiduciary responsibility to you. Nobody else, to you. What does that mean? That means that I have to make sure that your best interest is at my forefront. So as much knowledge as I have to go ahead and make sure that I translate that into advice I give you. And then you are more than welcome to do whatever it is that you want to go ahead and do with it. If you want to say, you know what, I know that the market is really, really bad, but I want to buy too, I'll be like, okay, that's all you. I could just give you the information and that's it. But condos are taking a really, really big hit. They dropped 36.2%. Los Angeles metro area, 35%. We are taking a huge, huge hit in year-to-year sales. Next month is gonna be even worse. Now, mind you, in my last videos, I already anticipated this. I said, do not be surprised if you see somewhere between 30 and 40% year-to-year change decreasing in sales. I am going to go ahead and state that it's going to be around 40 to 50% before we go ahead and see a massive decline in real estate prices, because that means that more homes are staying on inventory, more homes are taking a lot longer to sell, sellers are going to go ahead and adjust, comps will not go ahead and reflect exactly what you're trying to buy. So like for instance, this is what a lot of people were doing, especially these investors. What they were doing is they were buying, let's say in the community, they were buying 10 properties. So for the first 4 of them, they would go and buy them for, let's say for the sake of argument, $300,000. The next 2, they would buy them at $350,000. Then the next 2 after that, they would go ahead and buy them at $400,000. You see where I'm going? So now the comps are gonna go ahead and reflect the higher amount. And then what they would do is they would just go ahead and dump all of them, because then those first 4 that they spent $300,000 now are worth about $425,000, $450,000. You're gonna make yourself, you know, $500,000, and then you go on to the next one. So it's gonna take a little bit more time for it to go ahead and drop down. Now to see exactly if it's a buyer's market, as of right now, the home prices have decreased. Now I'm gonna go ahead and show you this little Excel spreadsheet. This is on average overall in the state of California, okay? The state of California as of July 2022, last month, was sitting at $833,910. That is the medium sales price here in the state of California. Before that, in May 2022, which was a peak, that was at $900,170. Now, if you keep going, you see that the home prices were relatively low, but there was big bidding and this and that. But where was it started? Now, if you go back to 2018, which is respectively 2019, that was when like the market was at a fair medium. You know, it wasn't too much, it wasn't too little. We always go up during the summer months, which is respectable. That's exactly like I've been telling everybody, the slow months are coming up. October, November, December, January, those are usually the slow months in any buying season, big cars, homes, or anything like that. The buyer's market, in my opinion, in my very, very, very meaningless opinion, would probably be somewhere along the lines of like between the average prices being around the $603,000 to $610,000. Now that's when the market was stabilizing, interest rates did go down. That's when it came down to like, you know, 3%. And everybody was refinancing, everything was looking good. Even before that, we're at 565, 534. So I think 600,000 as a medium price is going to be on average. Now that is going to be a massive price reduction all across. From the 833,000 over to the 600,000, that is on average $200 and something thousand decrease overall. Los Angeles, San Diego, San Francisco, especially. San Francisco has just been stupid with the pricing and how much it's gone, but it's not a buyer's market yet. You see everything dropping. It's not going to get there. It has to get down. So to adjust for standard inflation, I think 610,000 to 600, and let's say on average 620,000, that is going to be our point break to know that it's going to be an equilibrium. And that is going to be not a seller's market and a buyer's market, and we're going to kind of be even as a whole. So if you want to stay up to date on exactly where the medium home prices are so you can make that decision on yourself, like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. I really appreciate you guys watching. Until next video, guys.
I don't wanna waste a minute.